Number one trading rule is the trend is your friend. And I really want you to stick to that rule, just because trends do not disappear overnight. And usually it's going to take a year and sometimes even 10 or 20 years for a trend to be completed. So always try to learn this lesson and try to master spotting the trends. How much, when you look at the market, you are going to see a lot of choppy movements because markets have that fractal nature. That much overall, this direction of the move that you see on the chart is nothing more than the uptrend. So market moving to the upside. So overall trend would be bullish. Now, I want you to take a look of the pound dollar chart. This is the historical chart that displayed the last 60-70 years worth of the data. And what we can see in this example is that pound dollar was trading to the downside for the last 60 years minimum. So the idea of trying to trade against that larger trend is never going to work. How much you can get the change in the trend when you are switching the time frames maybe faster, the overall trend in the pound dollar is bearish. So if you want to swing trade, it's probably much better to try to stick to that bearish setups. Here's the Aussie dollar. Now we can see here that we moved nicely lower. After that, let's say 2001 till 2000 and let's say 12, 13, we were moving higher. But that trend didn't last a day, two, it lasted for more than 10 years. And now we are again back to that bearish move. So of course, it's much smarter to trade to the downside in the Aussie dollar if you want to follow that rule, that trend is your friend, instead of trying to pick up the bottom and trying to trade to the upside. Just because you never know when the trend is going to end. At least you won't know that part at the beginning of your trading career. Let's see another example, dollar yen. So here market is just moving lower. So there is no reason for you to trying to trade to the upside if you know the larger trend. Now, let's get to the idea and learn how to spot the trend and what you need to do. Upwards or a bullish trend. Uptrends appear in the market when investors are optimistic about the currency and think it will prove stronger against the other currencies. To identify an upwards trend, price action must make series of higher highs and higher lows. For visual representation of an uptrend, we are going to use a trend line or channel tools. A trend line in an uptrend is going to provide strong support points where new buyers may come in. So this is the example of what we are going to search in a chart to get a clue that market is in the uptrend. So we want to see a series of higher highs and the higher lows. So if we look at the Euro Pound daily chart and we start from the bottom and we just draw a simple line that will connect that swing points, we can see more higher highs and higher lows being developed. So we can easily say, okay, this is an uptrend. Here's another example. So again, always try to start searching for a trend from some significant turning point in the market, or at least point that you can see here. So don't try to search for the trend at the middle of a move. So in this case, the lowest point on the chart is this one. So from that point, how much this look a little bit choppy, overall we see more higher highs and higher lows being made compared to the idea of seeing more lower lows or more lower highs. So overall direction of the dollar CAD on the 4-hour chart is more or less bullish. So we can say we are in an uptrend again. How to draw uptrend with trend line? The easiest way to draw an upwards trend is by using a trend line. Draw a line from the low through the first higher low. A trend line that we can draw can be marked an ideal level where the market can push higher again and again. When price remains above the trend line, we are going to consider further bullish movements in the coming period. So if we open this blank chart without any indicators there, we can see that uptrend in the Kiwi dollar. So if you just draw a simple line from the low to the first higher low, we can see here that we tested the trend line once, twice, third time, and only a fourth time we managed to break the trend line. Until we don't break the trend line, we can consider this pair to be in that upwards move and that we can look for a more bullish action. Once trend line is broken, we can say, okay, it's probably done for now, and we can change a direction. So that fourth time we can consider, okay, probably we want to try looking at some downwards trend. Drawing an upwards trend can be done also with the help of the channel tool. The process is same. Drawing an upwards trend can be done also with the help of channel tool. The process is same. Drawing the line from a low through the first higher low and placing the line at the top or the bars candle. Now, instead of having just a support line, we are going to have a second line that can often be a good resistance. So the process is same. So first of all, we are going to draw that first line the same way from the low through the first higher low. And after that, we are going to place that second channel line or just copy the trend line at the high point of our chart, like here. And what we can see at that final stages of the trend, price failed to get any more support, and we finally managed to break down. But that upper channel line gave you that clue, okay, we are close to that line, so we can probably expect to see some reversal soon. So a good place to think about the potential resistance in this case. And in idea, for example, maybe that upper channel line breaks, so price move higher, then you can use that channel line as the next support. Let's see over here. So process is the same. Now, on this chart, we can see that price tested that upper channel line once. The second time we didn't come even close, but every time when we don't come even close and the market breaks that lower channel line, we can say that trend is more or less done because we didn't have any power to go and test that upper resistance levels. So there is a better chance of us seeing a strong reversal to the downside. Downwards or bearish trend. Downtrends appear in the market when investors are pessimistic about the currency and think it will be weaker against the other currencies. To identify a downwards trend, price action must make series of lower lows and lower highs. For visual representation of downtrend, we are going to use a trend line or channel tools. A trend line in a downtrend is going to provide strong resistance points where new sellers may come in. So same as we want for the uptrend, just the opposite way. In this case, we want to see a series of the lower lows and the lower highs. Okay, now if we look at this Euro-Yen chart, what we can see, its price is moving downwards, but we want to start always from some significant turning point, or at least some high point in this case. So if we are using the high as our starting point, and just by trying to connect the swing points in the market, we can see more lower lows and lower highs being made. So it's clear that this is a bearish trend. Let's start here, pound yen. Again, we are going to start at the highest point and just check the swing points. And we are seeing more lower lows and lower highs being made. So it's clearly a downtrend. The easiest way to draw a downwards trend is by using a trend line. Draw a line from the high through the first lower high. A trend line can be an ideal place to determine where the market could push lower again and again. While price remains below the trend line, we are going to consider further bearish movements in the coming period. So we can use the Kiwi dollar as our example. The first thing we need to do would be to draw a trend line from the high through the first lower high. And we can see that the trend line offered two nice resistances before we seen a break. But also what I want you to watch here, and why I really love trend line, is that you can see 4 times that same trend line offered a nice support point. So even when trend line is broken and we think the trend is over, we can still find some use in the trend lines. And if you ask me, if you give me only one tool to work with till the end of my trading career, I would always pick a trend line, just because if drawn correctly, you can really get a lot of value out of them. Now, once the trend line is broken, you can go and try to draw another one. So again, we are using the highest point and then some significant higher low. And here we can see that that second trend line offered us a decent trading opportunity for that final push to the downside. Let's see another example. So again, we want to draw the trend line from the high to the first lower high. And we got one test before we managed to see a break. But again, that same trend line provided a decent support for a 4th time. And again, we can go and try to draw another trend line just because that original one was broken, and see if that can provide us with an opportunity. Drawing a downwards trend can be also done with the help of a channel tool. The process, once again, is the same. Drawing the line from the high through the first lower high and placing the line at the low of the bars or candles. The lower channel line can offer a good support point. If we use this Canadian dollar Swiss franc 1 hour chart, first thing first, we draw a simple trend line from the high through the first lower high, and then project that line at the low point. And we can see the 2 times we got that nice support. After that, we can create another channel. So from the high through the first lower high, and then project it to the low. And again, we can see that in both times, the end of the trend came after a retest of that lower channel line. This is the part why I really like drawing the channels. Now, let's use this chart and just for example, try to draw as much things as we can. So the first thing first, we can draw a simple channel to the downside. Once this channel is over, once we break the channel, we can say, okay, we are probably in the uptrend, so we can start drawing that trend lines and the channels for the uptrend, and we can hold this view for a while until this channel can get broken, and after that, again, another channel, more trend lines, and we are fine. So I don't want you to have 101 trend lines and channels on the chart, but I want you to start drawing and practicing trend lines and channels on your chart and always use them just because they can offer that small clues for any system that you trade. For example, if you use a trend trading system, and let's say we are in the bullish channel, you can always go with that idea that while we remain above that lower channel line, we can look for a bullish play. So we can use that breakout as the early exit or the invalidation level. Or if you are trading the counter trend systems, you can use that break point as the early confirmations to your system. Let's use it here. Let's say Canadian dollar, Swiss franc. So a nice bearish channel offer a lot of opportunities, but also inside of that channel, you can draw that smaller channel lines just to give you more details. Now, I want you to go and open 10, 15 blank charts without any indicators on them and start practicing drawing the trend lines and channels. If you have any question, feel free to ask them in the comment section below.